technologies. And the convergence between and among these technologies, we think, is going to cause explosive growth. Explosive. There is more out than ever before. We have 5 platforms right now. So DNA sequencing, these are the foundational innovation platforms. DNA sequencing will transform healthcare. Robotics, especially adaptive robotics, which can work alongside human beings. The labor shortages today answer to a prayer. Energy storage, so the movement to electric transportation. Artificial intelligence, which is the glue holding everything together, and blockchain technology. And we have underlying these 5 major platforms are 14 different technologies. And the way we have set our analysts' responsibility up is not by sector or by industry, it is by technology. Because as these technologies evolve and ride down the cost curves, they will be accessible to more and more people, more sectors, more communities. So it's a very different way of setting up a research team. And when it comes to Tesla, for example, it's been critical to our understanding. Auto analysts should not be following Tesla. Should be robotics analysts, energy storage, artificial intelligence, software as a service. And we have 3 analysts following Tesla. You know, there's big misunderstanding of innovation and innovation stocks. We're going through it again now. But you can see from Tesla, we kept buying it every time, you know, the conventional wisdom took it down. And it has gone from $25 to $30 to $1,000 in fewer than 3 years. We think, if you look at the 5 platforms and the 14 technologies, you have to go back to the early 1900s to see anything remotely resembling it. Back then, 3 major platforms: telephone, electricity, automobile. Today, 5, involving 14 technologies. And the convergence between and among these technologies, we think, is going to cause explosive growth. Explosive. Volatility is not a bad word. In 2020, volatility on the upside was a beautiful thing, right? Because we've had such a difficult year, we get the volatility question. Our strategy is inherently volatile. Disruptive innovation is controversial. These companies are going to disrupt the old world order, which is the foundation for most traditional asset managers' investment management processes. These indexes are at the heart and soul. And I truly do believe they represent the most massive misallocation of capital in the history of mankind, especially because of the amount of innovation taking place and the importance of the US being at the vanguard, you know, not to have public market support, you know, having these stocks just pummeled and now companies thinking, I'm not going public, I'm just going to stick with the private markets. You're not going to be able to scale. Some will, but it is rare to be able to scale the way these companies will need to scale to capture these opportunities. It's the reason when Elon Musk threatened to go private, remember the famous tweet, funding secured, which got him into all that trouble. I wrote a public letter to his board of directors and to him saying, don't do it. You won't be able to scale the way we think you can scale. And, you know, he says that was one factor the board considered after reading our letter. I've been watching this. I was at the World Economic Forum, I think it was in 2017, and I was sitting on a panel with the Minister of Innovation for China and also the Minister for Malaysia. And I saw how focused and driven and determined they were. And so we're taking them seriously. What I wonder is the world is going open source in terms of software and technologies generally. And China is cutting itself off from a good bit of that. If you look at what they've done in the crypto world, they're out. Miners are out, exchanges are out. I don't think it's illegal to hold Bitcoin, but you certainly can't traffic in it in China. That is shutting down an open source movement, which is a new global, digital, private, rules-based monetary system. And I think the rest of the world is going to move towards that, and there's power in numbers here. So China's beginning to cut itself off from the rest of the world. They think they can do it themselves, that they can import the talent. And we certainly have heard of many engineers poached from Taiwan Semiconductor and from the genomics companies. So we know they're hard at work, they're paying up, and they seem very determined. They know this is one of their tickets to success. But then I look at what they're doing from a capitalistic point of view, and they're providing disincentives for success. Okay, you want to scale this into a mega cap company, you're going to lose your job and be banished because you're becoming too powerful and creating inequality in the income stream. So this idea of common prosperity, it would seem to me, and we have limited our holdings now to very low margin holdings, logistics and Xpeng in the autonomous space, that might play a role in common prosperity, meaning driving access down into tier 3, 4, 5 cities, right? Now, technology should do that. So, but again, cutting themselves off from the rest of the world, I think isolationism typically doesn't work.
Let's talk a little bit about cryptocurrency and blockchain. How do you see the market evolving here?
What we believe is happening is 3 different revolutions. One is a money revolution, one is a financial revolution, and one is a next-gen internet revolution. The last one would be what people are calling the metaverse. So the money revolution is what I mentioned earlier. We think that very few currencies will be playing in that particular game. Bitcoin and Ether are the 2. Bitcoin more dominant from a money point of view. And again, each one of these words is extremely important. It is the first, global, big important word, private, digital, rules-based. Hey, this is what I've been looking for ever since the end of the gold exchange standard in 1971. And I said, okay, well, how big could this be? And at that time, we were looking at $6 billion in the equivalent of market cap or network value, so $250. He said, well, how big is the US monetary base? This could become the reserve currency of the crypto asset world. And at that time it was $4.5 trillion. Now it's $8 trillion. Bitcoin today is in the $750 to $800 billion dollar mark. So 1/10 of that. And we see El Salvador adopting it. We see black markets in Turkey and many other countries, because these people know what can happen with fiscal and monetary policies gone awry or with corrupt regimes. So that's Bitcoin and Ether. The financial revolution is DeFi, and really just taking all the middlemen out of the financial ecosystem. A real threat to all of us. I mean, we're trying to, we know that the combination of digital wallets and DeFi is going to hollow out a lot of financial institutions. May already be, because a lot of lending and saving is taking place on DeFi because it offers lower loan rates and higher saving rates. So that's a compelling combination. So we think DeFi it is scaling enormously right now. And I think we've had very good tests. May of last year, we had Bitcoin cut in half, Ether cut by more than half. I was waiting for the leverage in the DeFi system to topple it, and it didn't. And whatever makes these networks, whatever doesn't kill them, is making them stronger.